Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 11th of May here on a Thursday in 2023. Not much has changed, at least in terms of the broader market. We are still into this 4200, which is our level for a potential sell-off. Fell a little bit shy of it in November, December, but nonetheless have seen the market trade down at least 1, 2, 3, and 4 times. The one exception was over in July to August when the market broke and traded up about 200 handles. That's going to be what I call the risk parameter. Risk is again up here, and the reward is for another sell-off. Many headlines can be what is the catalyst for that sell-off, but that's what we'll be looking for, not necessarily this week, but the week after and beyond as we go through May. Selling may go away. We'll see. But that still is the play to the downside for the big picture. And that's going to be the thinking for any individual stock, any individual equity product or future, which includes the Dow and the Russell, which it's a little bit weaker for the big perspective. So just getting a start to our sectors, where that big picture does play a little bit more to the downside with risk of a break. We are continuing to watch the financial markets and the XLF. So any particular positions you have, maybe to the short side, are working on a sell swing down from that 33.50. Broader market, not quite there yet. But what is continuing to be our KRE. KRE is the regional financial banks. And if you ever want to take a peek at which individual banks are part of, or the leadership, or the largest market cap within the KRE, again, regional banks, that's a big headline, and that's going off to lows. You can take a look at the Analyze tab. And on the Analyze tab here in KRE, you'll see under Fundamentals which stocks are the leaders. So just to get a little concept here to show some of them, I will click on these and then get these into the chat in this window here. So NYCB, just like a look at the first few. NYCB is a regional bank stock that it's New York Commodity Bancorp. So that one is a little bit more bucking the trend, or that's one of the largest. And I think as you look at this list for KRE, the largest names have risen to the top of the waiting list. So MTB, RF, just looking at a few others, will be one of the largest ones to go through. So MTB is actually down at those lows. That's what I'd expect. And then Regions Financial is another stock that is on the swing to the downside. Other stocks would include Zion Bancorp and others. So that's another stock that has similar products or similar sell swing activities on the way down. So that's your financial sector. Remember that the financial sector, and the way to look at it, is not necessarily made up of small regional banks. The XLF, the sector Spider Select, is made up of large, very large, multinational in some cases, or major bank stocks. That includes Berkshire Hathaway, not necessarily a bank, but JP Morgan Chase. JP Morgan is Visa. We see it as a kind of a credit card company right there with the MasterCard. But we also have some banks, Bank of America, Wells Fargo, Morgan Stanley, Goldman Sachs, and down the list, Citigroup, and some of the others. PayPal is actually included in those financials, and that's a stock we'll look at just a little bit later. And the reason is PayPal did make 52-week lows in today's session with a continued sell swing and additional downside action or selling pressure hitting that stock. So the bears are not letting up, and I like to call this the whack-a-mole strategy, is when the market raises above, boom, 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 whack the mole, just putting short positions or short trades on the way down, as opposed to counter trending, which is going long and a stock falling. Nonetheless, PayPal is on the forefront of that sell side activity in large or stocks that are not necessarily regional bank or regional financial companies. And to look at some of the others, just a quick glance, go back to the XLF, which is right here, and we'll look at JP Morgan and maybe a couple others just to get us started talking about financials. They still are in focus. So JP Morgan, And then we'll go to, it's had some resiliency. And that's one of the main things in what we've discussed and in positions. It's not as simple as the financial sector is under pressure, therefore all financial stocks are under pressure. It's more geared toward the regional banks, and they're under pressure, and assets are leaving, and deposits are leaving, and solvency issues are there. But some of the assets are going to the large multinational, I say multinational, but large regional or countrywide, maybe countrywide, think of it that way, are these big market cap bank stocks. So that's why we see the push to the upside as assets or money leaves the depositors of those small banks, and in some cases does go to the big banks. So Bank of America is an example of a stock that is under continued pressure as opposed to some of the others. So Wells Fargo is an example, and of course Goldman Sachs, just looking at financial companies. So those are in focus. What else is in focus is the opposite. So just for the sake of tonight's video, as we're updating the middle, almost the middle of May, it's a split market. What's the split market? Bank stocks, we'll call it regional banks are down. Some of the large banks are up, but technology, let's XOK, just call it tech. Some of the tech stocks are up. The leading stock in today's session was Google, and Google continues to be on the upside. And a lot of stocks that are getting additional bullish pressure or bullish movement in their prices, in some ways and some more than other, Bard, as we call it Brad, but Google Bard, and other AI, artificial intelligence, software or releases or future products, current products, and the like. Microsoft is on that list with its investment, and maybe even call it control, but their investment in OpenAI and that ChatGPT and all the things that go along with that. But Microsoft shares do stay on the bull side, and they are on the pressure to the upside. Google with it. And another stock that's in that same vein is NVIDIA. So NVIDIA has its suite. You probably don't think of it as an AI technology or an AI artificial intelligence stock, but it's releasing a lot of its own software or hardware or some of the components that go into those machines or those technologies. IBM is on the buy side too, with its potential play to the upside. So IBM is holding its support, not the same as other technology companies, but we'll be watching it at that 120 per share level as it pushes through earnings and additional information from the fundamentals on its stock. You can always take a look at the fundamentals that's weakening, as we see here on the fundamental screen on the Analyze tab. So just going back to a couple others, NVIDIA does have some strong recommendations. I like to look at these earnings per share and see that that trend is rising. Not always, but that's the key to watch on the fundamentals. You can always dig a little bit deeper into those companies and the earnings and balance sheets. This one is for the records. Microsoft not only is a stock that shows consistent growth in earnings per share and dividends per share and book value per share and free cash flow per share and sales per share, and just to name a few, it's a stock that they all, at least the analysts here, agree on. And that's not common. Not common to have all of them in the sell column or all of them in the bull column. So I don't want to make any sort of references back to 2000 or 1999, but there's a lot of future potential if this AI revolution starts to take and go beyond things that most people are not familiar with, but as it gets more mainstream. So just remember a little bit, 1999, companies that had good fundamentals or maybe even poor fundamentals kept going to the upside despite a lot of reasons that they shouldn't be going up. So similar thinking, but to a much less degree. So Microsoft and other stocks in the tech sector are feeling that upside pressure. But there are more stocks showing 52-week lows, and again, promised I'd get back to PayPal. It is on that list of stocks in today's session that made new 52-week lows. And we have the opposite. We want to be on the short or the bear side of these 52-week low stocks. So that would start with Pfizer, weekly chart, daily chart, PayPal, promised you I'd talk about it, which is making new 52-week lows, and that's a big drop on its earnings, or at least the break of that 70 per share level. Otherwise, we see PNC, we see MetLife breaking to its new lows, Waters, Northern Trust Company, and Insight, and others. We won't go through them all, but those would include Insight, CF Industries, Mosaic, and the others, including Paramount, Match Group, and Dish Networks, some of those telecommunications or production companies in those industries. Just looking at the stocks, split between financials and technology, and so much more going on beneath the surface. Quick note about the bond market staying in its trading range, and I think that's where we are. We'll end the video with that logic. Trading range for the bonds, trading range for equities, sideways movement. Not much has changed, but this will not be the way it is forever. There will be a breakout, that's your risk, or another sell swing back to the bottom of that range. Be careful, be safe. This is Corey Rosenblum with tonight's Theo video update for May 11th, 2023.